We launched 303 Insurance Brokers just shy of 6 years ago, right at the beginning of COVID. And boy, was life easy. Insurance carriers really competing on price, rates were low, just really allowed me to build a great business at the end of 2022 into 2023 is we had the Marshall fire, and we had the COVID supply chain issues, cost of labor skyrocketing, and it really broke the home insurance model. This is not a political statement, but the home insurance model is broken due to the increased frequency of catastrophic events. 2022, we had 1,000 houses burned down. You look at the total impact of that in the billions of dollars. We then followed that up with two of the worst hailstorm years on record. The insurance claim on it touched almost $50,000. Arguably the biggest hailstorm hit Denver. That's the one that knocked out the Colorado Mills Mall and Lutheran Medical. And
if you hit that door-to-door sales guy in roofing or whatever, they are 100% incentivized to re-roof it, etc.
I talk to clients and they are in shock. Whether it's an auto accident, whether it's, a leak or a water break in their house, it's a traumatic, traumatizing moment. It's all about understanding and knowing how insurance works and how to use it to your advantage.
I'm an advisor to my client, and then based on what they want, I go broker them to the right properties. It's almost kind of like reverse.
We built his policy that he's not going to file a claim under $250,000 loss. The Marshall fire was 6-8 hours, and most of the 1,000 homes were burned. There was no reaction. A lot of the reinsurance carriers were putting a lot of pressure on the insurance companies to raise rates and to actually reduce their exposure, which meant they're okay if clients leave and go somewhere else. I had a friend whose husband had a business trip and was parked out at the airport. Just a couple $1,000s worth of things stolen out of his truck. I was like, I hope he didn't file a claim. And she's like, he already has. Who Wants to Be a Millionaire TV show, where you can phone a friend. I want to be the phone a friend guy. A client that had an evaporative cooler on his roof. And first year he owned the home, he forgot to shut it off for the first freeze. And it dropped thousands of gallons of water into his house. We got one of our restoration companies in there cleaning it up and doing triage while we filed the claim. We got them in touch with the claims adjuster. We got them into a hotel. We got their house fixed. We got them back into their house.
Insurance has absolutely demolished the condo industry.
But if we have a condo complex that costs $100 million to rebuild, and you're now looking at 5% of that as the wind and hail deductible, that has to be paid out by the association, and the association can pass it down to their members, that's now $5 million deductible. And once again, if you have a poorly written insurance policy in that HO6, you could be personally liable. I had a client last year that moved to me right after they realized that a loss assessment did not cover payout correctly, and they were on the hook for $17,000.
When that condo has that above 5% now, it's non-warrantable, their payments are higher, their down payments are higher, that's going to price depreciate the condo. So the condo will lose value.
I've got a client that's active on his board, and at some point they're likely going to go bankrupt because at one point they had 25% of the owners within their condo unit not paying their monthly dues.
Hey, this is Rob Tate with Engel & Volker's Private Office. I have with me one of my very dear friends, Jason Newell, to talk about all things insurance. Jason and I actually go way, way back. I think Jason's my oldest standing relationship that's still willing to talk to me. Him and I grew up in these Boy Scouts together, and we worked at Peaceful Valley Scout Ranch. We were in the same scout troop, and we were both horribly afraid of the same person, your father. Who was like 6'10" and a full bird colonel. So, Jason, thank you so much for joining us today.
Absolutely, and I would be remiss to say that we were Eagle Scouts together, which is always one of those cool things to be able to talk about.
The insurance arena here in Colorado has gotten kind of nutso, right? And so I thought a little bit of a background as to why the insurance have gotten a little nutso would really, really help people as they go to, shop their current rates and or they're purchasing a property or commercial or whichever. So what got us here?
Yeah, absolutely. So I'm going to take a step back first. And I got into insurance 8 years ago, as I was looking for a career change, and insurance really allowed me to do what I care about, which is helping people, and then protection of their very most important assets. So, we launched 303 Insurance Brokers just shy of 6 years ago, right at the beginning of COVID, and boy, was life easy as a new insurance agent. Everything you wanted in the marketplace was helping us out. We had, insurance carriers really competing on price. We had a lot of activity in the home buying and selling market. Rates were low, and it just really allowed me to build a great business, to service clients, but also to, be able to partner with realtors, mortgage loan officers, loan officers from banks on commercial deals and that sort of thing. And then what happened at the end of 2022 into 2023 is we had the Marshall Fire. We had the COVID supply chain issues. We had cost of labor skyrocketing, and it really broke the home insurance model. One of the things that I tell a lot of my clients is that this is not a political statement, but the home insurance model is broken due to the increased frequency of catastrophic events. So 2022, we had 1,000 houses burned down in the northwest part of the Denver metro area. If you look at the total impact of that in the billions of dollars, we then followed that up with 2 of the worst hailstorm years on record. I personally had a hailstorm damage one of my properties, and the insurance claim on it touched almost $50,000. And why was it so high? Part of that's because 15, 20 years ago when we had hailstorms, they came down out of the sky. Now most of our hailstorms also have somewhere between a 40 and 60 mile an hour winds with them. So not only are roofs getting destroyed in these, but also we're having siding, windows, cosmetic damages that insurance does cover on a good policy. So, insurance worked the way it was supposed to, but ultimately they've depleted their resources and their savings for claims. So they've had to, the first reaction was to increase rates. And we've seen rates skyrocket over the last 3 years. Most people probably paying 2 to 3 times their amount, as these insurance companies were just trying to figure out how to balance their books. What we've seen a little bit more recent, this was probably halfway through 2025 and continuing into 2026, is that we are seeing premiums drop back down. But what the insurance companies are doing to kind of hedge their bet is that wind and hail deductibles are increasing. The standard carrier now wants to charge a 2% wind and hail deductible. With that is 2% of the rebuild cost of your home. So if we think that Rob, what is the average home in the Denver metro area selling for?
Right now, it's about $630,000.
So, $630,000 purchase price. From an insurance perspective, we don't worry about the land value. We just worry about the physical structure of the home. How much would it cost to rebuild? So this hypothetical $630,000 home, maybe we'll use $500,000 as the rebuild cost. A 2% wind and hail deductible is now going to be $10,000 that a homeowner has to be prepared to pay as a part of a roof claim. Now I think it's a big adjustment and a big financial pill to swallow. So I don't want to just graze by and say, hey, this is the new normal, deal with it. But when we do look at the structure of it, a lot of times with insurance, it becomes a pay now or pay later. And so if you want to pay now and have a lower deductible later, your premium is going to be higher and vice versa. And so I think what it is it's a shaping of people's mindset around how insurance works, how deductibles work.
Well, and I think the consumers need to get smarter, right? Like back in the day, I've been selling real estate for 16 years, right? Hailstorm came through and you did the new roof dance, like da 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 da, new roof dance. Because what was the insurance qualification for a new roof? Wasn't it like 5 hail hits in like a 10 by 10 square or something?
Yeah, I remember, it used to be 5 to 10, hits in a square, and a square is a 10-foot by 10-foot section on there that they want to see it. And then I remember when one carrier, went to 12 hits per square, but they wouldn't count multiple hits on a tile. And they tried to get really weird and really tricky. And, I do think that, insurance and hail damage is a cumulative sport. We do have those mega storms that do damage a lot of roofs, but a lot of them take impact there. And I do think that between the insurance relationship with roofers and that sort of thing, we were probably replacing a lot of roofs that had some damage, but probably not enough damage to cause leaking and other, damage to the property by not addressing the roof. And now I think by putting more financial pressure on the owners is instead of replacing a roof every 2 to 3 years with the happy dance.
Yeah.
It's now a 5 to 10 year, circling on them. In the last 10 years, 2017 was when, arguably the biggest hailstorm hit Denver. That's the one that knocked out the Colorado Mills Mall and Lutheran Medical and that whole part of, Lakewood and Golden. That was kind of the start of this new section of hail. And I've had clients that have had 3 roofs since 2017 on their homes. And once again, if they have a policy and they have a great deductible, why not replace the roof? Well, the game has changed. And so, yeah, I do believe it's a big part of education. And that's really one of the big reasons why the biggest thing I promote to people is that you need to have a real life agent that you can speak to. You want to have a real life agent that can get a legitimate roofer on your roof to assess the damage. We'll talk about what the deductible is. We'll talk about the big picture, but you can't do that when you're getting your internet, from a .com business. And frankly, the way that they build their websites and write those policies, they're writing them with huge gaps.
Yeah.
And customers just don't know.
Well, and so that's one of the big takeaways, right? For whoever's listening is, if you hit that door-to-door sales guy in roofing or whatever, they are 100% incentivized to re-roof it, etc. Like the biggest thing I can tell you, working with Jason throughout all these years is before you ever sign a contract with a contractor, or before you ever call whoever has your policy, because you broker to so many of them, right? You call your insurance agent and you plan and position that, because the plan and positioning of that could determine how much is covered, what is covered, whether or not you should file. Like, I remember my sister filed a theft claim against her homeowners insurance for like a bicycle or something like that. For a $500 bike, her insurance skyrocketed the next go round. So before you file a claim or before you sign that roofing contract or whatever, it's always best to call Jason.
Absolutely. There's a lot of strategy around how your insurance policy works. And I know that when something happens, I talk to clients and they are in shock. Whether it's an auto accident, whether it's, a leak or a water break in their house, it's a traumatizing moment. And so, the first thing that I do when I take any of those calls is just say, hey, this is what I'm here for. This is what I do. This is why you've been making insurance payments. Now let's collect as much information as possible and talk about what our smartest decisions are. Once again, in this day and age, insurance claims count against you. A theft claim is the absolute worst. A water claim is the second worst. And the reason why a water claim is so bad is because normally once you have one, it starts to trigger others. So if you're in a 30 or 40-year-old home, you have a pipe break, you're far more likely for that next one to happen and come. So what we want to do is we want to evaluate every claim individually, differently, and get a good idea of how much it's going to cost to resolve it. And I would tell every single one of my clients, if we want to file a claim, I can file it faster than anybody out there. Super simple process. At the same time, you know what? We want to look at the impact it's going to have on rates moving forward, on your ability to buy that next house, on your ability, you know, to do a whole bunch of things. And so if we have, you know, a toilet that overflows, you know, in the guest bathroom, and you know, there's maybe a couple $1,000s worth of damage, we probably don't want to file a claim. Now, maybe for some clients, it is the right decision to file a claim, but for most clients that are homeowners, I'm going to recommend that they don't file a claim, and we want to save those claims for the big exposures. And you know, I like to talk through stories, Rob. I know you like to talk through stories. And so what I tell my clients is that I bought my first home in 2016. I've had it for 10 years now, and I probably paid somewhere between $20,000 and $30,000 of homeowners insurance for that property, and I have received $90,000 of claim payouts on that property. And so it's all about understanding and knowing how insurance works and how to use it to your advantage. And so that's something that as a broker, you know, I train my clients to do. I want them to call me. I want us to look at the claim from all angles and make sure that it's going to be in their best potential outcome.
Yeah. So it's kind of like our industry, right? Like some people think you're an insurance broker and some people think I'm a real estate broker. I'm not, right? I'm an advisor to my client, and then based on what they want, I go broker them to the right properties. It's almost kind of like reverse. It starts with what is the best case scenario for them, and then how, with my expertise in real estate, your expertise in, you know, of course, insurance, do we make the market meet them to the best of the ability?
Yeah.
Right? We're really advisors that people call brokers.
Absolutely.
But most people do it the other way around. Insurance brokers like, oh, here's your cheapest and best. Here's how I just get you off my plate today. And in real estate, people go, I want a 4-bed, 3-bath in this area. And you're like, here you go. Contract, right? So it's kind of same. I want to switch gears here. And I got a whole list of questions that I could ask you, and I'm going to pick one here.
Grill me.
I'm going to say, what is one lesson you learned the hard way in this business? And how could you avoid, or how have you learned to avoid it?
Yeah. Your lessons I've learned the hard way is, you know, I'll kind of take a step back and just, there's 3 ways in today's society that you can go get insurance. And this is auto insurance, but primarily focusing on homeowners insurance, as that's our audience, is you have the direct-to-consumer.com ones there. That's the worst option possible. It's cheap generally for a reason. The next one is through your captive agents, and those are your big companies that spend millions of dollars on advertisement, and they use that to draw them in. That's your State Farms, Farmers, Allstates, Liberty Mutuals of the world. And they know their product and they're selling their product. As a broker, I have access to, on the home and auto side, I've got access to about a dozen carriers. On the commercial side, I have access to even more carriers. And you know, one of the unique things is that we have a standard market for insurance on the commercial side, and then there's a specialty market. And so one of my hard lessons has been, is when I go down some of the more complex cases, is that there's sometimes size and scale within being a small business, that I've had some clients that I've tried to work with, but their product and their needs are just too large for our operation. You know, I've run into it with HOA buildings where you're literally having to price out and develop, you know, 12 to, you know, much larger unit condo complexes. And the hard part is they've become a huge time eater to get the policies prepared and ready. And then if the HOA is not ready to move on or something else still beats it, you know, it's learning how to stay in my lane. You know, where's my bread and butter? What are the policies that I know inside and out? And sometimes when I focused into the commercial side of insurance is I just don't know the, you know, some of the finer points that different businesses may need. And so that just puts me out of my comfort zone, takes me longer, and sometimes I'm not able to deliver the expertise that I want to.
Mm-hmm. All right, let's talk about more luxury products, right? Type things. So, recently I had a client buy a property in Castle Pines Village. And it's a unique area, right? Because it's well wooded. Home values there were, pretty strong. And so if you just go out to a normal insurance carrier, you got, 20, 25 grand, of insurance, right? Don't you guys have a different carrier for those? And, knowing the asset classes in around, can't you mold them where like all the houses in the village have a professional sprinkler system, right? That helps bring down the insurance rate. Can you talk on that a little?
Yeah, we can definitely talk on that a little. When we look at places like Castle Pines Village, get over into Red Rocks, Carroll, and even Evergreen Conifer, you start to look at those, and those areas, due to the terrain as well as the wooded feature there, to an insurance company looks a lot like Southern California. Especially with the windstorms, if we look at any of the major fires that have hit the Palisades and Malibu and other parts of California over the years, is it's not only the fire, but it's the dryness as well as the wind. Well, we have all of those here. Now, as an independent broker, we do have access to what we call high value carriers. They're not ideal for everyone, but what they have the ability to do is the financial pressure that a high value client has is different than your standard homeowner. And so, I have a client that bought a property. He moved from Wash Park up to the Breckenridge area, actually over in Dillon, Silverthorne, $4 million house, high fire line. And we were able to find him a policy. We were able to do it. But the conversation that I had with this gentleman, and he actually gave me the number, but he's prepared to, we built his policy that he's not going to file a claim under $250,000 loss. He needs to protect the catastrophic, the whole house burning down. He's not worried about the little things. So the conversation changes, the product changes, and thus we can find the value of that customer. One of the first things I have to do with every customer out there is understand, are they an emotional customer or are they a logical customer? And I know when they have a claim, they're going to be emotional, but we how do we meet them to sell them? I'm sure you see that with husbands and wives all the time, that one's an emotional buyer and one's a logical buyer, and it's not necessarily the husband or the wife, but when you're trying to sell the two different processing there, we can do that. So I can typically have with a high value client a much more in-depth specialized conversation than somebody that's buying a $630,000 home. We can protect into the high wildfire areas. There is conversation, depending on carriers, on fire mitigation. But as one of our carriers kind of sat us down within last year, and they're saying is that, and if you put a 50-yard perimeter around your home, but embers can fly 2 miles through the air in the wind, your perimeter didn't really do much. Right. I will say that insurance carriers have almost all hired third-party fire suppression companies to come out and if there's a forest fire in the area, they're going to come out and spray your home. They are going to do some protective measures. The problem is time. Is there enough time to do it? The Marshall fire was 6-8 hours, and most of the 1,000 homes were burned. There was no reaction to it.
Oh, something interesting on the Marshall fires that I just wanted to bring up for our viewers. So a lot of the people in the Marshall fires were underinsured. So what happened is they purchased the property in 2020, right? They bound with you or somebody else, and then we had the big price hike, right, between 2020 and 2023, and they never adjusted their insurance. So when their house burned down, they were completely underinsured. So just a little key piece of advice for whoever's watching: check your house value today as it relates to your insurance, because if you bought your house 15 years ago and you haven't really touched your policy, you might be underinsured.
Yeah. I mean, Rob's right on with that. The folks that were most effective were those that had the set it and forget it style of insurance. They got it when they got their house. The insurance value moves up with inflation, 3 to 4% a year. There is a coverage called extended replacement cost that most carriers offered at 10 or 20%. And yeah, the Marshall Fire was a perfect storm that it wasn't enough. We started 303 insurance in 2020. I already started seeing the market rate. Yeah, I saw that insurance carriers were undervaluing houses. So myself and a lot of other agents that I network with, we were already pushing higher rebuild costs on our clients because we knew it was gonna. We saw the writing on the wall, and the Marshall Fire, just exacerbated.
Right. You talked about it a little bit. Insurance rates are coming down, right? And you have some of these captive agencies not trying to buy up the market, right? I remember like a year and a half ago, you were actually referring out State Farm a little bit, saying, "Hey, State Farm's buying up the marketplace with super cheap rates, kind of like a Ponzi scheme almost, but not technically." I didn't say that, State Farm, you can't sue me. But but now they're increasing rates. So what are you seeing is going on in the insurance industry, and what do you predict for insurance over the next 12, 24 months?
Yeah, absolutely. Insurance companies are cyclical at the end of the day. And insurance works off of one thing, and it's called a loss ratio. And the loss ratio is how much premium insurance companies collect from their clients, and they need that to be greater than or equal to their operating costs. And we can still say that insurance companies could trim a lot of fat out of their operating costs. I fully understand that. And then they have their claims payouts. And so a healthy insurance company is got a loss ratio of somewhere between 0.92 and 0.95. They're making 5 to 8% profit. If you look at the money that they bring in, it's pretty good. When we caught our breath after the Marshall Fire and the 2 years of hail afterwards, most of the home insurance market was sitting at a 1.4 to a 1.6 on the loss ratio. They were hemorrhaging money. So they're the first thing that most of them had to do. And without getting too far into the weeds, insurance companies use something called a reinsurance company that they activate for catastrophic losses. And so a lot of the reinsurance carriers out there were putting a lot of pressure on the insurance companies to raise rates and to actually reduce their exposure, which meant they're okay if clients leave and go somewhere else.
And how they did that was you super cranked them, right? We'll still insure you, but now it's 8 times more.
Exactly.
Are you sure you want to stay with us? No? Aww.
Exactly. And State Farm, because they are so big, they are the biggest insurance carrier out there, they are their own reinsurance company. So they didn't have outside pressure saying raise rates. And what they did is they bought more market share. And the interesting thing was 1 year into it, as we were looking at updated market loss ratios, a lot of the carriers that I have access to, their numbers got healthier again on their loss ratio, where they can start to figure out how to reopen up business and start growing their books again. Whereas State Farm's loss ratios actually stayed pretty poor. And so thus now they're finally, their bottom got to last a little bit longer on low rates. Now they're coming back up. So, we work in a cyclical market. What we're going to continue to see over the next 12 to 24 months is the 2% wind and hail deductible become a bigger thing. And then the price discrepancy between your older policies that have a lower deductible. I just reviewed a client that has a $1,500 wind and hail deductible, and I was able to save them a whole bunch of money on the front side, but we had to talk about the roof on the back side. So clients are going to have to choose what's more important: premium up front to keep a lower deductible, or that money savings that they see and then the risk of a bigger deductible. And that impacts real estate and mortgages from the idea of escrow accounts. Your mortgage, how much you pay the mortgage company stays the same, but escrow for insurance and taxes is what's causing everybody's mortgage payment normally to go up once a year right now. So what I'm trying to do is, even if clients aren't ready to make the deductible change, the premium change, and rewrite their policy, I'm planting that seed so that they can do it. It is very important that clients have their ability to find their deductibles. There's a whole underrepresented part of the Denver metro area in this insurance and tax issue that are older, retired, low income families that their biggest asset is now their home.
Or fixed income, not just
Fixed income
Yeah.
is the same thing, and a lot of them are living in their biggest asset, which is their home, which they need to be able to take care of, but they can't afford the insurance premium or they can't afford the deductible, and so it becomes, very tricky on how to handle, those clients and be empathetic towards their situation, because there isn't necessarily a solution.
Yeah. What's one belief that you hold that you think is different than all of your peers, competitors?
Yeah, I think the one thing that we've tried to do with 303 Insurance is really the ability to take care of the clients after we sell the policy. Is to grow with them, is to change with them, is to advise them on claims. It's amazing how many people. I've never believed in high pressure sales. So I've never made a list of my 25 closest friends and family members and tried to go sell them insurance. Now, all 25 of those people know that I sell insurance, and probably 3/4 of them have come to me and are clients, but I do have friends that I don't insure, and it's always amazing to me, that people don't feel comfortable picking up the phone. And that's where I want I want to be different to my clients. I had a friend whose husband had a business trip and was parked out at the airport and had his laptop and, just a couple $1,000s worth of things stolen out of his truck. And when I was told about it, I was like, I hope he didn't file a claim. And she's like, he already has. He already went ahead and did that. And, unfortunately, this couple is going to be probably selling their house and moving in the next little bit, and this $500 or this couple $1,000 theft claim, which they could afford not to have filed a claim, is going to cost them significantly more than that over the next 5 years. Because most insurance companies used to use a 3-year look back window for claims and activity. Now most of them have gone to a 5-year look back, because once again, if you've had 0 claims, insurance companies want to protect your ability to keep your rates low. I don't write $500 deductibles. I want a $1,000 deductible for my client because I want it to be a little bit painful before we file a claim. $500 to $1,000 is a big jump. And so I feel that there's more conversation and more buy-in before they're willing to spend $1,000 with that. Because if somebody's renting a property and they want to buy in the next 6 months to a year, and they had their bike stolen, just go get a new bike. Go to Facebook Marketplace. We put in that insurance claim, and now it could interfere with your ability, with your debt to income and insurance cost and everything, to be able to buy a house. So I think that the ability to have conversations and be available, like I like to get to know more details about my clients than them just being a number on a spreadsheet. And that makes it easier for them to feel like I'm their friend and they can call me. What was that? There was that Who Wants to Be a Millionaire TV show, where you can phone a friend. I want to be the phone a friend guy for any insurance related questions.
Right.
Because you call me and it's not a claim. We can look at it from more angles. One of the biggest claims I had last year was a client that had an evaporative cooler on his roof, and first year he owned the home, he forgot to shut it off for the first freeze, and it dropped thousands of gallons of water into his house. And he calls me and he's panicked, as I would be, as anybody would be. And I said, okay, how are you doing? How's the family? We got the water shut off. Okay, cool. Let's breathe for a little bit. We got, I was about 99% sure it was covered in his policy. As an agent and not a claims adjuster, I will never say 100% certainty, but we knew this was pretty well covered. And he goes, well, why aren't we filing a claim right now? And I said, because I need you to calm down and relax a little bit more. And I'm going to tell you this is going to be okay. And we're going to have you in a hotel tonight that's covered by your insurance, and they're going to get this done. But if you call them like your hair's on fire, it just makes the whole process a lot more complicated than it needs to be. And once again, the insurance company is not going to make you go get bids on it. So we got one of our restoration companies in there cleaning it up and doing triage while we filed the claim. We got them in touch with the claims adjuster. We got them into a hotel. We got their house fixed. We got them back into their house. And so the ability to help somebody through all of those steps is probably the most rewarding part of this job.
Yeah. All right. I think last question. I'm looking at our time. Tell me how insurance has absolutely demolished the condo industry.
Yeah, condominiums are very unique. Personal insurance, home and auto, is very different from commercial insurance. The way it's written, the way it's designed. And so we have throughout the Denver metro area, we have some very large condo associations, condo complexes that to be properly insured, they are insured, the entire property is insured by the HOA, and they have a master insurance policy that covers the structures of the building, the roof, the siding, the studs, the electrical, all of that, the piping and everything. And then you as a condo owner are responsible for the interior. We call it drywall and in finishing. And it looks like it's a great deal on paper because we call that what is called an HO6 policy. It's one of the few insurance terms that clients bring to me because their realtor and their lender bring it to them. They're like, do you know about these HO6 policies? And I'm like, well versed in them.
Yeah.
And normally they're $50 to $100 a month, and so they're significantly cheaper than traditional homeowners insurance. But where we've seen the big pressure is these hailstorms that are, if we have a condo complex with 20 buildings of 12 units each that needs new siding, that needs new roofing, we're now talking hundreds of thousands of dollars. So the commercial insurance actually started fixing their issues several years before the personal lines home insurance did. And what did they do right away? They increased premium and they really increased the deductible for HOA associations.
And that's the key.
So at one point, these were a fixed cost, $50,000, $100,000. And most HOAs that were well managed could actually pay their deductible with their emergency reserves.
Yeah.
Well, when they started going to percents and 2%, 3%, 4%, 5%, which is the limit that Freddie and Fannie allow mortgages to be written at as a 5% wind and hail deductible, some of these commercial carriers actually pushed it to 8 and 10%. Percentages are hard to understand, but if we have a condo complex that costs $100 million to rebuild, and you're now looking at 5% of that as the wind and hail deductible, that has to be paid out by the association, and the association can pass it down to their members, that's now $5 million deductible. So the HOA has to say, hey, listen, can we just do it ourselves for less than the $5 million, which is an absolutely logical equation, or what percentage of the total damage is that equate to? And so what they do is they ultimately, most associations don't have it in the reserves. I'd be really worried if any association had it in the reserves, although Florida tried to actually pass this as a law and they quickly unpassed it or turned it down because the amount of money to keep the reserves healthy for insurance deductibles is not a feasible business model. And so what the HOA does is they'll take that $5 million and they'll say, hey, listen, in this property, we've got, 500 unit owners. So everybody takes their fair share of that $5 million. And once again, if you have a poorly written insurance policy in that HO6, you could be personally liable I had a client last year that moved to me right after they realized their loss assessment did not cover payout correctly, and they were on the hook for $17,000 to be able to pay it.
Well, it's not only that, right? That's covered in the 506,
Yep.
but it's also, he said this earlier, and this is a big key. Fannie and Freddie is where almost all mortgages are sold, right? So Fannie and Freddie have certain guidelines. It must fall within these boxes to be sold on Fannie and Freddie. And depending on which box they actually fall into, Fannie and Freddie have different rating systems, and those loans are more expensive or less expensive to trade or to purchase based on the risk profile, right? But the biggest thing you need to hear is if it doesn't fit into any box on Fannie and Freddie, then it cannot be sold on that marketplace. If it can't be sold on that marketplace, now you have to go to specialized lenders, specialized institutions, and for this arena, it's called non-warrantable.
Yep.
Right? Non-warrantable always comes with a higher percent of the mortgage. Like you're going to pay more interest rate than you would otherwise, and you have to have a bigger down payment, right? The problem with that is, and I'm telling you guys, I've been doing this 17 years, buyers don't buy a price of a property. Buyers buy a monthly payment. Now, if you get into luxury, it's different. But outside of luxury, buyers buy a monthly payment. Well, when that condo has that above 5% now, it's non-warrantable, their payments are higher, their down payments are higher, that's going to price depreciate the condo. So the condo will lose value because they're outside the buyer pool. They'll lose value till they can, on a monthly basis, match the other condos that don't have that issue, and or only really be available to cash guys. So until we sort this pretty major insurance thing, both with the H06s, making sure you have that, but until we fix the insurance in condos are going to have a rough time in the Denver Metro.
Well, the other thing that's happened that's negatively affected condos is that everybody's seen those random TV stories on the news about how with the HOAs foreclosing on somebody's property because they didn't mow their lawn well enough or this or that. And so the state house, passed some bills around what HOAs are allowed to do and property management companies. And while it's helped take away some of those fun, silly stories, it's actually had a really drastic negative impact on condo owners. And condo HOAs and condo property management companies is that they don't have the recourse. They don't have the ability through litigation in the state to collect HOA monthly dues from homeowners that aren't paying them. I've got a client that's active on his board, and at some point they're likely going to go bankrupt because at one point they had 25% of the owners within their condo unit not paying their monthly dues. They couldn't afford their insurance. They couldn't afford that. So, condos can still be the right option for a lot of clients. There's just a lot more due diligence before you should think about buying a condo. There's still the wonderful things of no maintenance and some of those things that are very desirable to some folks, but understanding the financials and, the roof, the siding, claims activity, and those things are really, really important to do. And that's why you want an agent that knows so much about the market and those things to be like, hey, listen, this is a good condo to look at. I wouldn't look at this condo because of their finances.
Sure. Wrapping up here, is there anything I missed or things you wanted to tell our thousands and thousands of viewers?
Yeah, you know what? I did a little bit at the beginning, but we talked about the 3 ways to buy insurance. You've got the .com direct, you've got the captive ones that sell their product, and then as a broker, I get to service my clients by fitting them into their best one. But the one thing we didn't talk about is insurance renewals. The average client is with their insurance carrier for 7 years. But one of the big advantages of being an independent broker is we have the ability to reshop our clients on an annual basis. So whereas my captive agent buddies know their products really well because I'm constantly shopping and reselling my clients on a yearly basis. It's going to give us clients for longer than that 7-year one there, but we're constantly checking in and rematching it to them. So even when I have lost clients to some of the other captive carriers, the conversation is in a year, they're not going to want to reach out to you to tell you what that rate increase is. They're going to hope that you don't notice it. Whereas with us, it's every year. We just got access to a new carrier at the beginning of the year, and their rates are dynamite right now. Rob has an email, I don't know if he's opened yet, with new insurance options for him.
I did open that. You saved me a lot of money.
Yeah. Hey, listen, we're gonna. I don't always have that ability, but right now, it's a carrier that's been in the marketplace that feels that it's repositioned themselves to grow, and that's where I can hit the button with my assistant to be like, okay, let's go in and take all of these clients with this carrier, one of my carriers where I'm seeing rates fluctuate a little bit more, and like, hey, we're gonna just start requoting them now. We're not even gonna wait till renewal. Just if we can get them into the new product with good rates and some of those. So the ability to understand the entire marketplace as well as the ability to reshop our clients, to me are two of the biggest advantages of using an independent broker.
Yeah. Jason, thanks so much for being here.
Rob, it's always a pleasure.
Really appreciate it. Jason, how, if people want to geek it, and by the way, I think you can tell that Jason is an insurance geek, absolutely super into his craft, can go as deep dive as you want, but at the end of the day, all he cares about is your happiness and service and your right alignment for your asset base to insurance. Jason, if somebody wanted to get a hold of you, how do they do that?
Yeah, there's lots of different ways. Easiest way is if you go to 303insurancebrokers.com. That's our website there. There's actually a link on it, and you can start the quoting process that quickly. You can also reach out to us at our main office line, 303-506-2755, or you can reach out to me via email, jason@my303insurance.com.
Thank you so much, guys. Thank you for joining me. I know insurance can be a boring topic, but it is one of those that the more you know, the better positioned you are for your financial future and your asset protection. So thank you for sitting with us, and we look forward to seeing you guys next time.